Can't see it yet. I know it's there.
Yep, of course. Perfect. Yeah. So, as I said, today we're talking about the social enterprise investment managed accounts. And this is part of the European Social Innovation Alliance, an ESF funded project that both SEND as well as FASE are part of. And yeah, in this webinar series that we started over a year ago already, this is the second edition. As I said, we seek to facilitate a transnational exchange on innovative financing and funding schemes. In the first edition, if you like to check that one out, we talked with Portugal Social Innovation and Better Society Capital on building impact investing markets. I'll send you the link in the chat once Markus takes over. And just a couple of words. I think most of you in this call already know SEND and FASE, but just real briefly, for those of you who are not familiar with our work, SEND is the voice of social entrepreneurship in Germany since 2017. We are network and advocacy group for social enterprises here in Germany. We were founded in 2017. And have since built a strong network of over 450 social enterprises and many other support organizations from academia, for example, foundations, the investing community. And we are very much obviously focused on our advocacy work in Germany, but have strong ties within the European Union and with European partners as well, such as the Euclid network that we are a member of, or also a partner of Impact Europe, since this topic of financing impact organization remains one of the biggest obstacles to create and to scale impact. And this is also one of the reasons why we host this webinar series here. And just a brief look at our agenda today. It's a really compact lunch session. Right now, giving the intro, and then in a second, I'll just hand it over to Markus Freiburg, who will present on the topic of the managed accounts. And then we have plenty of time for you to raise your questions before we'll give you an idea of what's next within the context of this project. And now, before I hand it over to Markus, we thought it would be nice to get a little bit better idea of who's in the room with us today. And since we are now 36 people in this room, it's a little bit too big to do breakout sessions. So we thought we'd just make a tiny little survey here. It really just takes 30 seconds, I think. I hope you can see the first question already. Maybe Markus, can you let me know if you can see the question? Oh, perfect. So just real quick, just to get an idea in which field or in which area you're based in. So which of the following best describes where you work at, if you're a public funder, foundation, corporate impact fund, or social enterprises, or something else. A lot of others. Those others, I encourage you to let us know in the chat as to which organization you identify best with. And the second question that a lot of you are already answering is, how much experience do you already have with the topic of impact investing? So there's a lot of them who are new to the field, a third that are already established in the impact investing world, and some first pilot investments. Perfect. Yes. All right. I think we had enough time for the survey. Thank you for participating. 31 out of 36 is a pretty good ratio, I would say. And with this, I close the survey now. And without further ado, I hand it over to you, Markus, to let us know the things. But I can't.
Thanks a lot, Pablo. Very warm welcome also from my side. It's a pleasure to be here and to have the session today and to share a bit of our work with the SEIMA. So for those of you who don't know me, Markus Freiburg, co-founder and CEO of FASE, that we set up 13 years ago together with Ashoka Germany to support social enterprises and impact ventures and raising growth capital. So far, we supported more than 110 impact ventures and raising more than 100 million across Europe. Our ambition is to channel 1 billion into the ecosystem by 2035. And we do that with corporate finance advisory work where we support impact ventures in raising growth capital. We have also set up our own co-investment funds, ESIF 1 and ESIF 2, that we are currently preparing, leveraging actually guarantees from the European Commission to expand the universe of financeable enterprises. And today I'm really happy to share a bit about our newest kids on the block, which is a managed account offering. And I'm sharing my screen in here. And that is basically an offering that we have developed together with Innpact from Luxembourg. And it basically offers investors the opportunity to build customized impact portfolios and really, let's say, benefit from an impact investing as a service offering. And the idea is that I would give you in the next 25 minutes a brief overview of this managed account offering. So what is it? Why is it needed? How can you build a portfolio with that? And then also briefly how is the process implemented? And happy to go then also in a detailed discussion and answer your questions. If you have questions in the meantime, already feel free to enter your questions into the chat. So what is it and why is it needed? So the SEIMA, so Social Enterprise Investment Managed Accounts, is a unique investment structure that connects the efficiency of funds with the flexibility of direct investments. So it's really, let's say, connected between direct investment on the one hand side and fund investment on the other side, and really, let's say, shall activate additional investor groups and really allow them to have a dedicated investment strategy that they could otherwise not pursue. So how does it look like? It allows investors really to build a tailored impact portfolio with a certain focus. This could be a thematic or a geographic focus, and have a portfolio of around, let's say, 5 to 10 social and environmental, let's say, sustainable companies, social enterprises, steward owner companies, cooperatives, or hybrid companies. So really, let's say, depending on the individual preferences of an investor, and it would allow investors to have to build a professionally managed, let's say, portfolio in an order of magnitude of 5 to 10 million, which is massively lower than what is usually required to build up a fund portfolio, because usually you would require at least 50 million to set up a proper fund portfolio. And it really allows investors to really, let's say, develop their personal individualized investment strategy, and on the other hand, work together with very experienced impact investors in the field, being Innpact as an alternative investment fund manager from Luxembourg, and our experience with investing in impact ventures, and really, let's say, have a very, let's say, cost-efficient structure. And it's in the end an innovative structure between direct investments and funds. So how we see it is that it's for investors really like an impact investing as a service. The investor defines together with us a strategy, and then we basically do the sourcing, the due diligence, the investment preparation, the implementation of the investment decision, and also the portfolio management. What remains with the investor is the investment decision. So why is it needed? And maybe just to start from, I think most of you are aware that we have significant, let's say, funding gaps in the market, and just to, let's say, refer to the 4 trillion SDG funding gap. And we also believe that in Europe we have a specific, let's say, funding needs. And I think I saw also Wolfgang Spies-Knaffel here and another participants that I think was doing a study for the Commission, also showing that there is significant a billion funding gap, especially for social enterprises. And I think from our view as far as I think we have come across, and I think there are really two important white spots in the funding of Europe that are overlooked. I think one is in the type of innovation and the other is for the act of innovation. So in terms of type of innovation, we feel that social innovation is very much overlooked, and there's a strong focus on technological innovation. I think that's also what we often hear from SEND, and I think what you can also confirm from your type of work. And in terms of the actors of innovation, we see that there's a strong focus on the traditional VC model, exit-driven impact ventures. But what is in our view completely overlooked is really, let's say, these non-exit oriented ventures, or what we call the new impact Mittelstand. So social enterprises that really want to build a sustainable model that generates both profit and purpose. And we feel also from a macro perspective that it's super important for Europe to step up at this important moment in time, and also to follow our own innovation model to really, let's say, build the true single European market of innovation. And we believe that impact investing and also SEIMA can play a role of that. So what are the barriers that hold investors back for the moment to implement those structures? I think one point that we always hear again and again is the other high transaction costs for implementing these rather small type of investment deals. And it's often that we see also that investors say, okay, we would invest, but we don't have sufficient, let's say, deal flow. And often some investors are struggling with funds because the funds might be too broad. They are not able to get involved into the investment decision. So there's not always sufficient flexibility that investors can really, let's say, get active. And that is something that we now try to address with this managed account structure SEIMA, where we really have on the one hand side an operation. So we do it based on a compartment structure in Luxembourg, a virtual compartment structure. So there is no need to set up separate legal structures. We can basically use existing structures and legal forms. We have a high structural flexibility. So there's a separate compartment that we can really define in terms of the investment strategy. It can be very flexible in terms of the number of companies that someone wants to invest, investment tickets, also the types of financial instruments or the sectors that people want to invest in. So it can be really, let's say, individually set up. So the investor is in full control over the investment design, and basically then trusts the sourcing, the execution, and the reporting in the hands of FASE and Innpact. And with that, it can really, let's say, allow investors to build an investment structure that somehow, let's say, sits between direct investments and funds, because usually you have direct investments, you have full control, but also high cost and high complexity if you execute it on your own, especially if you build significant portfolios. On the other hand, funds, you have an easy access, but usually you are not, let's say, involved in the investment process, and it's difficult for you to say, okay, I only want to have certain sectors, but not others. So SEIMA is really a very tailored, efficient, and curated possibility to set up, let's say, investment structures, and really then combine a professional management with a tailored impact. So it really helps to build customized portfolios, usually, let's say, in order of magnitude of 5 to 10 million, focus on impact-driven returns, and also following with my Impact Europe hat, I think we are a strong believer in the full return spectrum of investment opportunities that we see in the social enterprise and impact venture field. So this can be structured very, very flexible. And it also combines a professional management that we can bring as investment advisors, FASE, and this Impact as a compartment manager. And yeah, I think it's also interesting to see that I think there are very experienced teams behind both organizations. I briefly mentioned already, let's say, FASE with more than 100 million that we brought into the sector, and also Impact that are managing more than 40 impact funds with overall, let's say, investments of around 10 billion impact investments. So quite substantial. That maybe as a brief background of what is needed and why it's needed. But let's now, let's say, look more specifically how could such a portfolio of a compartment could look like, and how could it be set up. Maybe just to give you an idea, we have, let's say, I've brought with me, let's say, an indicative structure of how such a portfolio could look like. So if we say, okay, we set up a structure, let's say 5 to 10 million that we want to invest, potentially 5 to 10 ventures, where we do, let's say, an initial average investment of 500,000 euros, and we can also do follow-on investments. We would have, let's say, a tenure of this, let's say, compartment of, let's say, around 7 to 10 years. So basically, it would be an initial investment period within the first 2 years where we would try to build up the portfolio, and then have another, let's say, 5 to 8 years. So also more patiently than a normal closed-end fund to really, let's say, to develop the portfolio. We can, let's say, invest both in exit-oriented, but also non-exit oriented ventures. We can do with a compartment convertible loans, for example, or equity. So really, let's say, customized towards the needs of the specific social enterprises. and then also, let's say, define, depending on the investment focus, the sectoral and the geographic profile of the fund. And it's really almost like a menu that we can go through with the investors and then decide, okay, what are the structural characteristics that an investor wants to focus on? What are the impact verticals, either certain topics or SDGs? What are countries that someone would be willing to invest in? So is it Western Europe? Is it Eastern Europe? Is it Northern Europe? But obviously the sides are how much money can you bring to the table as an investor? Can I do it alone, or should I potentially team up with other investors? I think usually we say the minimum size is, let's say, 3 to 5 million. So this significantly reduces the minimum amount that is needed to implement such structures, but still quite a significant amount for many of us. So it's also you still need a significant commitment to start it. You need to define then what is the ticket size that you want to invest in ventures. How long shall the structure be set up? How many investments do you want to do, and what are the financial instruments? And obviously then also regarding the impact performance, you need to discuss and align with the investor. What are the main KPIs that you are looking for? Is it about CO2 tons saved? Is it about, let's say, lives improved, jobs created, liters of water saved, or amount of waste reduced? So I think that really depends on the individual, let's say, impact sectors that someone is looking at. And then obviously you also need to align on what is the financial return expectation that you have, either in a multiple of invested capital or an IRR expectation, because then we need to source social enterprises that can correspond to these let's say, needs. And how does it, let's say, look like? And this is just, let's say, for illustrative purposes, how potential structures could look like. So there could be a certain climate tech and energy transition compartment where you focus on SDGs 13 and 7, where you basically invest in decarbonization, renewable energy, energy efficiency, circular materials. And illustratively, you could focus, let's say, on the DACH and the Nordics. There could be another investor that is interested to focus on ocean and water stewardship, so SDG 6 and 14, with a focus on clean water access, biodiversity, and circular blue economy. Regional focus could be Western Europe and Benelux, or there might be another, let's say, investor that would want to focus on circular economy and sustainable production. And then we can also really, let's say, build a customized portfolio in these topics and source specific, let's say, investment opportunities. So this was more on the planet side. If you look on the social, on the people side, there could be topics like inclusive health and well-being, where we look for impact ventures with a dedicated impact on, let's say, women-led health ventures, aging populations, or accessible medtech. That could be one direction. There could also be interest to set up a compartments for tech for good and digital inclusion. So more around AI for social good, ethical data, civic tech, or inclusive digital designs, and have that implemented across Europe. And last but not least, there could also be a compartment that is focused on education and future skills. So focusing on SDGs 4, 5, and 10, where we would focus on digital learning, workforce upskilling, and social inclusion. So you really see it is very flexible how we could implement those structures. And it really, let's say, depends on what the investor appetite is for these type of structures. And after initial, let's say, overview of the potential portfolio strategies, I also want to share a bit on the process and how the cooperation would look like. Because if you look from structure to execution, it's in the end a joint venture between three important actors that also have, let's say, clear responsibilities. So on the one hand side, it's the investor that sets the strategy and the preferences for the compartment. So it defines investment strategy, impact strategy, also sets the risk and return preferences, and then also needs to validate the investments over the course of the process. And this really can be very different types of investor groups. So the initial, let's say, discussions that we are having with very different types of investors. So this can be foundations that want to start the impact investing activities and looking for additional expertise from the investment side, where they might have been experienced on the grant side. This could be families that really want to start building up an impact investing portfolio with early stage impact ventures. These can also be corporates that might have already an acceleration program and that now wants to start investment activities. But it could also be a public entity that, for example, a certain region, so a certain Bundesland would be interested to, let's say, promote social entrepreneurship in their region and might be considering how to combine this with national funds or with, for example, ESF funds to set up something. So the investor is bring the money to the table. And then we, from our FASE side, would focus on deal sourcing, portfolio design, and the impact strategy. So we, let's say, sourcing the opportunities in the market, looking for other co-investors, structure the transaction, and then also, let's say, do the due diligence, prepare the investment decision, and then also, let's say, do the portfolio management. And Innpact would focus on the impact framework, the financial structuring, the governance, administration, and compliance reporting of the compartment. And they basically have an established structure in Luxembourg that they are using, where we can basically then pull in the individual, let's say, compartments, so that we have a managed account for each investor in the certain, let's say, topics. And how does it look like? Each SEIMA portfolio would be a fully segregated compartment within a Luxembourg-based securitization vehicle. And you would then have, let's say, individual compartments that represent an individual managed account with a specific focus. And then there, let's say, certain ventures would be included either with an equity investment, a mezzanine investment, or a subordinated loan. And obviously, the strategy is to build let's say, more compartments over time to set up individual, let's say, different investments and structures. So how is then the process really looking? So it starts obviously with a definition of the investment strategy between, let's say, the investor and us. We are focusing then really on let's say, building an investment a pipeline, screening cases, sourcing cases from our co-investor network, and then basically doing the due diligence, and also, let's say, then making a recommendation for the investor, and then the investor, and this is an important point from a regulatory perspective, the investor needs either to approve the investment decision or explicitly forgive his veto right, his or her veto right, before it can implement it. And this is an important, let's say, border, let's say, line that we cannot cross with this structure for regulatory reasons, so that we are not in a position to take the investment decision ourselves. But therefore, we are benefiting from a, let's say, significant reduced regulation. And then in the end, the impact venture will be added to the compartment and also then be monitored and supported from our side. Where do we source those, let's say, co-investment opportunities from? I think now over the last 12 years with FASE, we have built a network of more than 2,000 impact investors across Europe, actually having executed now transactions in 12 member states of the EU. So really trying to build an open pan-European pipeline. I think this really, let's say, provides investors with the opportunity to tap into high quality, let's say, co-investment opportunities. And then maybe just to wrap up, we believe that SEIMA can be a very effective, let's say, investment solution that close a gap between direct and fund investments. So where we have can offer investors a high level of customization, also an active involvement. So investors can really, let's say, pick and choose what types of impact and ventures they want to invest in. With that, they still have a moderate, let's say, diversification, especially compared to direct investment. They still have a very high cost efficiency because they almost get let's say, an individualized structure for percentage fees that are comparable to fund fees. And it's also, let's say, a low structuring complexity because it's mainly outsourced and working on existing structures. I think that maybe in a nutshell. And yeah, I think we're doing it together with our colleagues from Innpact. I think some of you might know Arnaud and Romain, really, let's say, appreciate it. And yeah, looking forward to implement now the first pilot, hopefully mid this year. We are in the process of finalizing the MOU with one investor so that we can also bring the first, let's say, SEIMA structure to life. I think with that, I would open it up for questions.
Thank you so much, Markus, for showing us this new exciting opportunity, especially to that could be able to attract also some new folks into the impact investing sector who want to remain so a little bit more controlled than just investing into a fund. So and also thank you for condensing this topic into this brief presentation, just to let all of you guys know. Right up front, Markus already has agreed that we can share the slides afterwards with you, and as you know, we'll have a recording as well, that if you want to forward it to some of your colleagues who couldn't be with us today, that would be a possibility as well. And we already have some questions here in the chat. I would love for if you like those the people who had these questions to ask them to raise them themselves. Actually, Michelle started early already and asked about the levels of return. Michelle, you asked relatively early. Afterwards, Markus talked a little bit about it. Is your question already fully answered by his further explanations, or do you still have questions about the return? The returns?
No, I think I was just interested in the type of investors, and if they're sensitive towards impact and willing to be okay with a lower rate, for example, lower return, or if it's your traditional investor that is then looking for their typical return. But I think it's clear to me now.
No, but thanks a lot, Michelle. I think it's a very important question that you raised, and I think obviously, and I think further, and also I think we have started from a very, let's say, impact first motivation, and I think it's clear that we want to make additional, let's say, funds available for impact. And I think this is really, let's say, for allowing investors to build a dedicated impact portfolio, and obviously that has a cost. And if someone was only concerned about, let's say, maximizing financial returns, then I think the SEIMA structure is not the right thing for them. Then I think they should, if they want to do venture, let's say, and really maximize financial returns, and they would just do a normal, let's say, VC fund. So I think usually it only makes sense if investors have a dedicated intentionality to support certain impact areas, and that I think then something that they might not be able to let's say implement with a fund that might be too broad than from a geographic perspective or from a sector perspective. But obviously this is also something that I think we need to balance, because in the end it must make sense, and that we need to be able to build up a decent portfolio. So, for example, if there was, I don't know, just making it up now, a foundation in Heidelberg that only wanted to invest in social enterprises that are based in Heidelberg and working in, let's say, circular economy with an inclusive workforce, that might be a bit too specific, and we will most likely not find 10 enterprises that we can invest in. On the other hand, if someone would only say, okay, let's do global impact, let's set up a SEIMA and save the world with 10 investments, this might also not be the right investment structure, because it would be, let's say, too broad.
Perfect. So I just fixed my tiny technical bug that I just experienced and can see the questions again. Wolfgang had a question about the overlap between the core portfolio and the managed accounts. Wolfgang, do you want to?
Yeah, sure. I mean, congrats. Looks like it's a great thing to do. So what is your view on the synergies between what FASE is doing at the core portfolio and what you offer as the managed accounts? Like you're probably not going to do warehousing, but what is like the overlap? What do you expect to be the overlap between the core portfolio and the managed accounts?
No, very good question, and good to see you again, Wolfgang. So I think obviously there will be a lot of synergies. And I think one main idea is, I think, given that we are building a pipeline of co-investment opportunities, both from FASE anyhow, but also from the ECIF2, I think then it's a good idea also to use that, let's say, expertise in pipeline, and also to motivate other investors. So we would expect that there's a significant amount also of co-investments between, let's say, the other FASE activities that we are doing, and also co-investment with a fund. That said, there could also be other use cases for the SEIMA that we are not primarily pushing, but we had a few discussions with large multinational corporates that are, let's say, bringing their own accelerator programs. And it could also be an interesting complementary opportunity to start investment activities. So we would also be able to implement it with partners that already, let's say, bring the full pipeline, where we basically then do the investment management. But I believe this will be more the exception than the rule.
Okay, thank you.
Correct. Next one up, Frederick. Do you want to raise your question yourself?
Yeah, sure. Thank you. I mean, I think it's quite straightforward. Is the cap of the 5 to 10 million you talked about, is it like a legal cap in the structure you have, or is it flexible and you could also make a bigger fund or bigger managed account?
Hi, Frederick, and thanks for the question, and good to see you. So I think this is more an indicative, let's say, a number where we believe that will be the sweet spot. Technically, I think there is no upper limit for the structure. I think at one point in time, and then the normal fund structures kick in, and we would expect that if someone, let's say, would want to invest 30 to 50 million, they would potentially, let's say, want to use a normal, let's say, LPGP structure. But theoretically, this could be, let's say, uncapped.
Yeah, makes sense. Thanks.
I'm not sure why Zoom is failing me today. Okay. Every time it's my turn again, I can see the question again. Very great. All right. Next one up was Björn. Björn, you want to raise a question?
Yeah, hello. As I already wrote, I think there is a real need in the market that you are directly addressing, and not just. I don't see this only as an alternative to a fund investment. I also see it as an alternative for wealth holders who would alternatively think about building their own teams. So you could actually just outsource it and start with this. One question I still have is whether it could also be an open-ended structure and just run forever and be really patient. Yeah.
Hi, Björn, good to see you, and thanks for raising the question. Indeed, I think now with the first family office where we're discussing the first plan, they are very much concerned about patient capital and investing in what we call the new impact Mittelstand. So I think theoretically you could also set up the structure for 90 years. So I think technically we will most likely not do it open-ended. So technically open-ended because the underlying financial instrument that the investor would invest in is technically a bond. But it could have a very long maturity, and if the investors agrees, we can also, let's say, renew them or prolong the maturity. So technically, indeed, I think that could be a very interesting feature to also bring more de facto open-ended structures to life.
Yeah, unfortunately, I can't see the chat. Markus, maybe you can pick the next question. I'm sorry.
Yes, I think the next one is Scarlett. How does the return risk ratio look like? Yeah, I think this really, let's say, depends on the individual, let's say, investors. I think the benefit is that it, as an impact, is investing as a service offer, let's say, really allows investors to, let's say, choose their individual investment strategies and also have a minimum, let's say, diversification of the portfolio, because usually I think we would recommend to have at least, let's say, 5 to 10 ventures into the portfolio. And then I think then it really, let's say, is up to the investor what type of ventures they want to invest in. What we see is that often, for example, non-exit oriented impact ventures have a lower return profile than exit-oriented impact ventures for good reasons. And I think that obviously then always a question how the portfolio composition shall be set up. Shall we only do non-exit oriented impact ventures? Shall we do, let's say, also exit-oriented ventures, or what is also then the financing conditions, for example, that an investor foresees? And that obviously has a direct implications on the return. But in the end, I think the main purpose of the managed accounts is to create additional impact potential. So we would definitely see a very focused impact strategy. But obviously, I think the investor needs to define what is also their minimum, let's say, financial return strategy.
I can see the chat again.
Thank you. Maybe
sorry,
can you
go ahead.
add one more sentence regarding the risk in the managed accounts? Is the risk not higher than in the overall fund then, or?
I think that depends a bit on the fund. So if you compare
Yeah.
to our own co-investment fund, ESIF2, I would definitely say yes. You are right, because in the fund, we have the guarantee from the European Commission with 10 million that we can reduce for significant de-risking. So this is something that we don't have with the compartment structure. That is correct. And I think you are also right. If you are at the lower end of the portfolio with only 5 ventures, I think then you would have also some kind of diversification risk. We see that many VCs are building funds with 10 to 15 ventures already. So I think if you would have such a size of the compartment, I think it would already be well, let's say, diversified. And maybe a sneak preview, what we are currently also discussing internally is whether there could be a potential also to build blended structures with this, let's say, managed accounts to really combine different types of investments. But this would then be, let's say, the next innovation horizon.
And the last question that we had in the chat here is from Patrick Meinertz. What is the cost structure and how can it be similar to that of a fund?
Yeah, hi Patrick, good to see you, and thanks for raising the question. So indeed, I think what I was referring to, that in times of management fees, for example, that is comparable. So we're currently foreseeing the structure with a 2% management fee, but then with an additional, let's say, a transaction fee of around 10K. And then there are additional some cost of the compartment that need to be, let's say, customized based on the specific investment strategy. But as a rough indication, we are talking about around 50K one-time setup cost and then 50K annual cost just for the structure. And if you have experience with fund structures, either in Germany or in Luxembourg, you would easily see that these are very low numbers compared to what usually, let's say, a full fund would ask for.
Perfect. So Patrick sends a thumbs up. So his answer has been question has been answered. And maybe one question from my side. You already mentioned possibility also from public authorities engaging with this new approach. And I was wondering, you already mentioned the European Social Fund, and I mean, we have some participants here from our European Social Innovation Alliance, some international guests, and this is the debate on the new multi-annual financial framework of the European Union, and maybe some opportunities opening up. Where do you see the potential and for example, European Social Funds going into a SEIMA structure?
No, this is a very good question, Pablo, and thanks a lot for bringing that up. So indeed, overall, we see that I think the Commission is strongly, let's say, pushing also to use ESF funds for financial instruments, partly because of that there is a lot of budget pressure on these fields, and that we need to find innovative solutions also to provide financing for social enterprises. And I think especially the SEIMA structure could be really interesting because it really allows customized regional portfolios. So we could easily have, I don't know, a SEIMA Brandenburg or a SEIMA Berlin that offers then dedicated funds in certain geographies. And what we understand, and we are already, let's say, in some concrete discussions with ESF managing authorities in individual regions, where that could be an opportunity to set up then a SEIMA structure mainly funded from ESF plus funds combined with some own funds from the region. And then it could be set up like a co-investment structure. I think the interesting proposition that we see is then due to the ESF funds, because we see that obviously it would provide an interesting leverage for public funds because the majority would be EU funded. And so far as we understand the structure, there would be 2 significant advantages. One is that then, although only potentially 10 to 15% of the funds would be from national funds, everything that flows back could stay with the national authority. So that would be quite compelling. And the other part is that we also understand that financial instruments have some very interesting technical features for managing authorities, because the way at the moment the financial instrument is set up, it can then also be used to have the funds fully allocated, which can be a challenge if regions have a challenge to absorb the full funding. But I think overall, I think this could be very interesting. And if here are some people in the room from other European countries that would want to have foster a discussion with their managing authorities, ESF managing authorities, we would happy to do it and to support on that. I think we had some initial discussions also with the Baltics and in the Netherlands already, and happy to continue. And I think last word on that, there are also a few interesting blueprints. So, for example, in Berlin, they set up a regional VC fund from EFRE funds. So this is not impact focus. I think also it's an interesting example how they basically used EU funding to set up a structure, and then use now whatever comes back as their own contribution for future around. So it could be an interesting idea also to set up a perpetuum mobile for individual regions.
Yes, I'll just post the examples you just mentioned.
Thanks for sharing.
That I already also saw Sophia's thumbs up when you talked about further discussions on the topic of ESF, future ESF, and how to use it wisely. So maybe one last question from my side, just out of curiosity, since you've already been in discussions and conversations on the SEIMA in the last couple of months. Is there any particular group that you mentioned that has been particularly interested into this concept, or is it or is it just all around very much similar?
I would say there are different types of investors that I think that are especially interested. I think one type of actors is indeed philanthropic actors like foundations that have been active on the grant giving side in certain areas, and that now are considering also to let's say build a complementary, let's say, investment activity, and we basically could bring in our investment expertise and also, let's say, a ready-made structure. I think so. That is one group. I think the second group is indeed around, let's say, family offices that have a dedicated interest in a certain topic, and this can be sector or geographical, and that is not covered then in, let's say, existing funds, and that also don't have the capacity or competence to do this in-house. I think this is a second group. I think the third is around corporates, and this could be either corporates that have an interest to source ventures along their value chain, or also corporates that might already be operating an accelerator program and want to start with impact investing. And I think then the fourth group is indeed about the public entities, public authorities that are considering setting up, let's say, specific regional structures.
Perfect. Thank you. All right. These were my questions. Are there any more questions from the audience to Markus? And I think looks good. I think you also already answered quite a bunch of questions within 15 minutes.
Maybe commenting on one, let's say, comment
Mhm.
that Peter made on it. So I think what we really believe is the benefit, or can be the benefit of it, that it can reduce the entry barrier for investors to get active in the impact investing field. Because they basically, let's say, team up with very experienced partners like Innpact and FASE, but they still have the opportunity to really, let's say, define individually their investment strategy and also be involved on a pick and choose basis. So we really want to eliminate all excuses that people could have in not getting active in the field. And I think this is a really a nice, let's say, customized entry level also. So it's somehow also a call to action to all of you. So if you see investors that are standing at the sidelines and say, wow, this is super interesting and we would love to get engaged in it, but so far we don't, let's say, dare to do it on our own because we don't have the competence or we don't have the capacity potentially. Happy to have a joint discussion on that and to see whether we cannot, let's say, activate more people to get active in the field.
Yeah, thanks for that. And
That's true, Björn. There will always be excuses, but it's all about reducing excuses so that we move people to action in the end.
Perfect. Any more questions? Then I think we'll wrap up this compact lunch session today. Sorry, just with some last words from my side. Well, first of all, thank you very much, Markus, for your input today and showing us this new innovative concept. We as I already said, we'll provide you with both the recording as well as the slides in our follow-up mail that you'll receive by the latest at the beginning of next week. By signing up to this event, to this webinar today, you will be on our list as well for our upcoming webinars. We have one in the pipeline on innovative philanthropy that's coming up. So stay tuned for this. Also check out our other content on the European Social Innovation Alliance website with our first edition of this webinar series, and also many other great webinars from our partners from FASE as well to find there. And just on a SEND note, if you want to know a little bit more about our work at SEND, we have just posted it in the chat.